Well, good morning, good afternoon, Maverick Traders. How's it going? This is Rob Reinhold. It is Payrolls Report time, the first Friday of the month. So let's jump into it. Okay, so here we are down at the bottom. We've got US Payrolls Report and the Canadian Payrolls Report. So we could really be looking at trading the dollar, or we could be looking at trading the CAD. We could be looking to trade the dollar against the CAD. So there's a lot of things we could be doing, but we want to make all of our predetermined decisions way before the actual announcement comes out in about 10 minutes. So again, you could decide everything, but look, everything needs to be decided in advance when you're trading news. And you need to really decide how you're going to trade the news. You can enter before the news, which is the biggest risk and the biggest reward. You can enter on the news, having a resting order out there to try to catch a move when it happens. That's a little bit less risk, a little bit less reward. And then there is the second stage entry, which is you let the report come and go, you let the initial freak out happen, and then you jump in after that, probably about 2 or 3 minutes after. One of the big risks of trading news is slippage. Look, you could be in a trade short, you could put in a stop at 183.10, and if it has a big move, you don't get stopped out. Maybe all the way up here until, 183.50, 183.60. You could get a lot of slippage. Your stop order just says, get me out. It says, get me in the line to get out, not get me out. Now I want you to get in the line of people that want to get to the exit. That may not be for a while. We also get what we call the whipsaw, the freak out. So we get you can go long, put a stop down here. You can see this got stopped out. And the person who got short, they put a stop in up here. They got stopped out. As you can see, everyone got stopped out because look at this candle here. Long wicks on each side. Nothing happened. But both longs and shorts got stopped out just because of volatility. So when we're playing news, we want to try to play it. Okay, if we're going to get in the news announcement when it happens, we have to have very wide stops. We have to make sure that we don't get hit by these, by slippages, by the whipsaw. So look, the easiest way to avoid that is to do a second stage entry. That is the easiest way, is just to say, okay, you know what? I'm not going to mess with any of that stuff. I'm just going to wait a few minutes after the announcement. Then I'm going to take my position. That's the way I'm going to be trading this report. I'm not super excited about this one. A lot of times I get up in the morning on Payrolls Report day and be like, oh, this is going to be a great move. This is going to be an okay move. This week we had the ADP report come out on Wednesday that was much, much weaker than expected. Much weaker. You take a look at it on the calendar. Let's go back to the calendar here. Take a look at it on the calendar. You can see they're supposed to get 154,000 jobs, and we got 89,000. But then we got unemployment claims that were way lower than expected. That's a very low number. So this number, I think there's enough uncertainty around this number that it definitely is a tradable event. I just don't think it's going to be a 200, 300 pip move. I think it's more likely going to be a 50 to 100 pip move, but that is still a playable move. So let's jump into the charts and let's break down our relative strength and weakness. And let's take all of our currency baskets, which we love the currency baskets because it just equalizes everything. We can take a look at purely what is the dollar doing, what is the yen doing. Look, we're not going to take a look at the dollar. No, let's take a look at the dollar. Here we have, I'm on a 1 hour chart. I'm a little bit shorter time frame than I usually am because this is a Friday. I don't intend to hold this trade over the weekend, so I do have to shorten up my time frame. You can see the dollar is weak. Dollar is currently weak. So the question is, does this report reverse the dollar from being weak to strong, or does it continue the trend? We always like to play the trend continuation. We're trend traders here at Maverick, so I'm definitely looking at dollar short going into this. The question is, what do we look at it against? Yen is also weak. Yen is frankly a lot weaker than the dollar. So if we're looking to play short dollar, we want to find something strong. So yen is not strong. We take a look at Swiss franc. Okay, Swiss franc is looking okay. We got a nice high base breakout. Let's see if there's anything better than Swiss franc. You can see Euro is also having a nice high base breakout. Pound is also looking to break out to new highs. So we've got Swiss franc, Euro, and Pound all look good at the moment. Let's take a look at CAD. CAD is weak. So look, if you didn't want to play dollar, you could absolutely play CAD on the downside, but I'm going to play the dollar. The Aussie, this is not a strong looking chart, especially when we take a look at it compared to the Euro, the Pound, and the Swiss franc. Let's take a look at Kiwi. And Kiwi looks great here. Nice high base that we've been forming here on Kiwi. So I need to find out what is the strongest European currency and then pair that up against the Kiwi to see which one is the strongest. So let me take a look at Euro, Swiss franc. All right, so Euro and Swiss franc are the same. You can see that over the last whole 24 hours, there's been really no difference between the two. So let's take a look at Euro versus the Pound. Okay, and you can see Euro has been drifting lower against the Pound. So the Pound is the strongest of the European currencies. So I want to see what is stronger, the Pound or the Kiwi. And I got to say, tough call here, but we've got Pound rising over the last 24 hours. It is stronger. Yes, we're having a little pullback here, but I've got to put Pound on the top of the list. So for me, Pound dollar. Pound dollar is going to be the trade. And you can see we've got a really nice looking chart here, moving higher. We don't have any real serious resistance until up here about 122.70. So we got about 70 pips before we see any resistance. Yeah, this is a good looking trade. So the big question is, where is the entry? And this is where it's going to be very tough. I like it when my currency pairs aren't right at like a resistance level. And you can see here, 122.20. 122.20 is where we just hit and bounced off. That's only 13 pips away. That's going to be triggered very, very quickly right after the news announcement. So I'm not going to have a rushing order out there. I don't want to get hit by whipsaw, but I'm going to have an order sitting out there basically ready to go after the first minute or two of the whipsaw, the freak out, whatever's going to happen. And I'll look to try to get in after that. So let's see, pound dollar. I'm just going to have a resting order out there. So I'm going to put in a buy stop limit. We always use our stop limits. Again, I'm just going to throw the buy stop right here at 122.20. I'm not going to have this active, but I want to have this ready to go. And I'm going to put a 15 pip limit on it. I'm going to go ahead and attach my stop order to it. So again, we have no idea where we're going to get in. So I'm just going to put this at a 0.3%. When I trade news, sometimes if I don't have a stop, I know exactly where to go. I start at 0.3%. So this is basically going to be 36 pips. So we're going to be down at 121.84-ish. Like I said, this order's not live. I don't have it live here, but I'm just getting it ready. And again, the cool thing is I can drag this up and down. I can drag this order up and down to adjust after we have the announcement to come out. All I want to do is I want to wait long enough for the freak out, for the possible whipsaw, the possible, slippage. I just want to wait long enough to get out of that. And as long as the pair doesn't rocket up to 122.70, I want to be able to get into it after that initial burst of energy. If it doesn't go our way, let's say this plummets down to 121.60, then it means that this trade was not meant to be. That the dollar was much stronger than we expected, and all the work we did leading up to it means that we were just flat out wrong, and if we're wrong, we don't make a trade. And the other thing we don't do is we don't try to come up with a new premise as fast as we possibly can, because we don't want to, quote, miss anything and jump in on the other side, not doing the real work that is necessary And again, that's just a big mistake. That's emotional trading. Just trade the plan. Plan the trade, trade the plan. All right, we're less than a minute out here for the report. We'll see it in the candle when we get the move here. So let's just wait for the report. I'll be keeping an eye on the CAD as well, just for interesting's sake. Okay, you can see initial move is strong dollar. Initial move is strong dollar. And again, you can see strong dollar. So that means that the equity markets are likely headed lower. Equity markets are not going to like a strong dollar. Wow, 336,000 new jobs, double. Wow, that's a big number. That's a big number. Now look, this is where my earlier days, I would have seen that number and say, oh my gosh, this is a great opportunity. I need to go long dollar. And I would have run out there and just jump in a long dollar trade. And guess what would happen? It would reverse. It would reverse. And I would take a loss because I didn't really plan it out. So this is where, after 26 years of doing this, I've missed many payroll report setups. I've caught a lot, but I've missed way more. Look, I'll just close it up for the week, and I'll come back next week and try to grab some more pips. While we're here, let's check in on CAD. You can see CAD is also strengthening a little bit. Not as strong as the dollar. CAD is also strengthening, so their report must have been decent here. Let's check in on the numbers on CAD before we take off. Yeah, wow, the CAD report was better than the US report. Forecast was for 22,000. Let me just bring the news down here to you. Forecast was 22,000. Actual was 64,000. A drop in the unemployment rate. At least the U.S. unemployment rate went up. That's going to be something that's going to dull this report a little bit. Plus, wages went down. That's going to dull that report. But the CAD report is just dynamite everywhere. It's triple the amount of jobs, and the unemployment rate ticked down. So, yeah, if you are in CAD trades, I think that is the better place to be than dollar trades. But again, like I said, you can't just decide right now that you're going to go long CAD. You can't do that. That's not proper trading. And yes, I know that we're going to sit here and watch this CAD. It's probably going to run for the rest of the day, okay? But look, that's not proper trading. Proper trading is everything is predetermined, and if you didn't predetermine it, you don't do it. You plan the trade, and you trade the plan. All right, well, I have no desire to enter my pound dollar trade, and it doesn't look like it has any intention of going back up to that point. Typically, I wait like 30 minutes before I cancel my orders, but in this case, this is a pretty clear case that it is not, the dollar is not going to weaken today. So we'll go ahead and just cancel this, and we'll have a good weekend. All right, thanks for joining me. Have a great weekend, everyone. Goodbye.